Hey everyone, welcome back to Scotty Pog, and I'm Scotty. Today we're kicking off an exciting new series where we deep dive into a popular trading strategy called the wheel. We'll be using none other than the popular and volatile stock GameStop, or GME as our stock. All right, so what exactly is the wheel strategy? Simply put, it's a systemic approach to selling options designed to generate consistent income in your account. The wheel involves three main steps, and the beauty of it is that it's relatively straightforward. Let's break it down. The first step is selling a cash secured put option. This means that you sell a put option on a stock you'd be happy to own at a certain price, and you have enough cash in your account to buy the stock if the option were to get exercised. For example, with GameStop trading at, let's say, $23, you might sell a put option with a strike price of $18. If GameStop stays above $18 by the option's expiration date, often referred to as an expiry, you keep the premium you received from selling the option. And if it drops below $18, you buy the stock at $18 per share. It's pretty simple, and it allows you to make some premium while you're banking on a stock coming down to a price you're comfortable owning it at. So if you end up owning the stock because your put option was exercised, you move to the next step, which is selling a covered call. This involves selling a call option on the stock you now own 100 shares of. Let's say, for example, you now own GameStop at $18 per share. You might sell a call option with a strike price of $22. If GME stays below $22 by the option's expiration, you keep the premium. If it goes above $22 on the expiration date and expires, your contract expires above $22, you sell the stock at $22 per share, making a profit on the stock itself plus the premiums collected. So for this example, you own GameStop at $18. You sell it at $22, so you've made $400 plus the premium that you got for writing the call option. And if the call option you sold expires worthless, you simply repeat the cycle. Sell another put option, collect premiums, and aim to buy the stock at a lower price. The goal is to generate regular income from the premiums while potentially profiting from the stock price movements as well. So there are a few key benefits to the wheel strategy. First, it's a way to generate income regardless of the market direction. Second, it can lower your cost basis on stocks that you own. And third, it provides a structured approach to trading that can help manage risk. Let me show you what I've done so far. Okay, so let me show you what I've done so far. You've got a graph here. This is an Excel spreadsheet with pretty much all the information I have for my 100 shares. Okay, on the left here, you can see the date that I bought, the date that I made purchases, the ticker, which we talked about is GameStop. You can see the price at which I bought them, the number of shares, which equals 100, and the total amount spent, which is this dollar amount right here. Now, listen. First and foremost, I don't claim to know the most about the stock market. Okay, I don't claim to be an expert. I don't claim to know all the tips and tricks. My goal for this video series is just to be transparent with everybody. I want to document kind of what I'm doing. I want to go back and maybe in the future watch the mistakes that I made. I want to be able to point out things that I learned. And this is a part of that. Okay, I'm documenting the trades that I made. You can see that here. So you can see the total amount that I spent for 100 shares of GameStop. That number divided by 100 is obviously, it gives you my cost basis of $29.50. The cool thing about the wheel strategy is that selling these covered calls actually lowers your cost basis. So as you can see on 6/24/24, I sold to open a covered call of GameStop, one contract, at a 36 strike price. For the expiration date of 6/28, I made $18.32 on the premium. I did the same thing on Monday. This is a short week, so there will be, I believe there will be less volatility. But I made $23. And if this gets called away at $30, my cost basis is $29.50. So a 50-cent difference times 100. I've made $50, which I'm fine with, right? I'm not trying to make a home run. I'm just trying to have consistent income using a volatile stock. So as you can see, I've made $41.64 in the past 2 weeks just trading this. Now, a lot of you will say, but GameStop is down. And you're right. Today, I think the price of GameStop ended at around $24. So I'm down, $550 on my investment. You're right. And that is the scary part of the wheel strategy. However, I'm comfortable holding this stock because I believe that it will go up at some point. GameStop has a lot of volatility to it. And if you have followed GameStop so far, you know that. You know that this is a stock that could blow up at any time. I'm not trying to hit a grand slam. I'm not trying to hit a home run. I'm just trying to get on base. And this is a way to do that. So, yeah, I mean, and at some point, if I continue wheeling this long enough, right, if I sell enough covered calls, I will be making money. I will have earned my investment back. Now, that's a long way down the road, but I will have earned my investment back, and I will have my investment paid off. I will be plus money. Let's go over and check the chart out. Okay, so we're looking at the daily chart for GameStop here. And as you can see, right, we've got the volatility that we talked about. If you guys have followed GameStop, you know that this whole thing has been a wild ride. Whether you're a believer of the tinfoil, whether you buy into the Roaring Kitty memes, the 35-day cycle, whatever it is, I can get into that stuff if you guys want me to. But I'm going to talk about the technical analysis that we see here on the chart. Okay, the first thing that we see here is this EMA. The 50 moving average on the EMA, okay? The 50 moving average is this line that you see on the graph here, okay? It's a very good indicator for an intermediate support and moves of the chart in the intermediate time frame, okay? And as you can see here, ever since this point right here, May 2nd, the stock has kind of used the 50 moving average as sort of a support line, right? You can see here, this thing kind of bounced off of it, right? And it's been above it. You can see here it bounced off of it. And again, what have we done here? We've bounced off of it right here, right? So the stock is currently using the 50 moving average as kind of a support, which is totally fine, I think. I think it's a good indicator of places that I would like to buy. You can see, as a matter of fact, on this day here, right, this candle right here, it pierced the 50 moving average and got bought right back up. And then the next day, which was today, July 2nd, there was a large move off of the EMA. I think that's a good support zone. Okay, so the next thing we want to look at is volume. Let me move myself here. Okay, again, this is volume on the daily chart, right? I mean, as you can see here, volume has kind of petered off, right? Let's draw a little trend line here. I mean, we see a sharp decline in volume. There's no way you can deny that. Every single huge uptrend that we saw, every single big day came with a large amount of volume. That makes sense, right? It just makes sense that the stock moves with big volume. It really seems to me like traders are sitting on the sidelines here. They're just waiting for a reason to buy this stock, right? They're waiting on, because here's the thing, after the investor meeting, with everything Roaring Kitty is doing, buying into Chewy, etc., there's not a lot of people are just kind of standing on the sidelines waiting for a reason to get excited about this stock. And so I think as soon as we see some very high, I would say higher than average volume, this stock is going to take off again. So the next thing I want to look at, I've added some supports and some resistance lines to the chart, right? So I see here that we've got support at around $20, and then the next support down is $18. We've got resistance, though, around $25, and then above that, $30, right? So that's the next couple things that we've got to break through if we want to continue to go higher. I've also got the RSI chart on there. You can see it's right in the smack in the middle at 50, right? Which is kind of the neutral zone. It's not in the bear zone. It's not in the bull zone. It's just right there in the middle. I think, again, as soon as investors get excited, right? As soon as some news breaks, as soon as they talk about what they're going to use that $4 billion they raised for, I think there's going to be a lot of volume come in and this thing could take off. So just to kind of wrap this up, everything I've talked about comes back to this, okay? I'm confident that GameStop is going to go up at some point, right? If it is called away, if my shares are called away at $30, I will be able to exit a less than stellar position. Okay, I will be able to get out of my 100 shares at a much higher stock price than I want to own. that will be good. Until then, I'll continue selling covered calls. I'll keep you guys updated every step of the way. I'll keep a running total on my spreadsheet about how much money we've made, about where we stand with the position, about options or decisions that we make. I'll keep you guys updated. Like I said, my goal is full transparency for this YouTube video or for this series. I hope that you guys, subscribe, like, comment. Let me know if you guys have any suggestions about how I can make this better. But until then, I'll keep updating you guys probably once a week and let you know, the next covered call, etc. And we're going to try to run this thing up to, $1 million. That's the goal, right? The goal is always $1 million. I'm a firm believer in the fact that educating yourself about finance is one of the best things you can do, not for just yourself, but for your family too. And financial freedom is the ultimate goal. You've got to find a way. I've got a day job. I get paid, pretty good money, and my family is comfortable. However, financial freedom is the next level, right? Not having to worry about, sudden bills, etc. And that's the goal. That's what I'm aiming for. So, if you want to follow along, throw me a subscribe, watch the video, leave me a comment about what I could do better. I look forward to hearing from you.